Hey everybody, welcome to the March 20th video edition of Upstream Ag Insights. I'm Shane Thomas. Took a little hiatus from the video side of Upstream, was traveling a bit and then a little under the weather, but excited to be back this week and in the coming weeks with video editions. And this week we're going to talk a little bit about the Bioceres and Marrone Bio merger, as well as the Canadian Competition Bureau ruling on Farmers Business Network's complaint into them from a couple years ago, and the ruling that was just announced here this week. So we'll get into it. And so Bioceres and Marrone Bio was an interesting merger this week. Really notable. There's been a lot of different biological news and the like around the industry lately. Bioceres is actually a South America-based organization. They have basically a bunch of inoculant from an inoculant side of the business. They have an inoculant business, as well as a seed and traits business and some other biologicals and biofertilizers. But maybe not as robust, and that's under their Rhizobacter or Rhizobacter branding. They do 260 million or so in revenue, publicly traded on the NASDAQ, and really have one really compelling drought-tolerant trait within their pipeline, but we won't get too deep into that. Really global footprint. They sell across 40 or so companies, something along those lines, and so really interesting group. Next, Marrone Bio is really a leader in the biological-based crop protection side of the business. They're U.S.-based, also were traded on the NASDAQ, a little bit smaller in revenue numbers, but still have been growing pretty rapidly here over the last number of years. But both these groups have pretty strong portfolios. They have pretty strong pipelines. They have a lot of patents, a lot of products in the works, and so them merging together I think is really compelling. When you start to look at the size of their business combined, it's about a little over $300 million US, which puts them into being one of the largest biological-based organizations globally. Not all of that is biological. Some of that is their seed and trait business in there. So they're probably close to like 150, 160 million, somewhere in there. I couldn't tell exactly depending on how they broke things out, but pretty meaningful business that they have in combination. And Marrone was essentially acquired, but we'll call it a merger for the value of about 236 million, I think is what I read, which is close to double what they were last trading at publicly at the prior close to the acquisition getting announced. And I really like this merger for a few different reasons, but I think if we look at some of those, we can get into three specific areas, and the first is really the geographical footprint that they now hold. And if you look at the Bioceres business, they're primarily in the southern hemisphere, strong business in Argentina, quite a bit in Brazil as well too, some in South Africa, and they do have a little bit, but sub 5% of their business is in the northern hemisphere, and so they have a little bit in the U.S., a little bit in France, but nothing else beyond that. Whereas if you look at the Marrone Bio business, they have about 70% of their revenue coming from the North American side of things, and so really nice combination for those two companies together. They both have strong distribution and relationships within that footprint. And so if you look at Marrone Bio, for example, in the U.S., they have relationships with all the major retails and distributors. So Nutrien, Helena, Simplot, those groups are all they all have relationships with Marrone. So pretty nice fit there. And then if you look at the portfolio as kind of the second dynamic, and there's a few things within this that I think are compelling, but first and foremost, for those viewing, if you look up at the chart in the top right, they actually now both cover off row and cash crops. So going beyond the just corn or soy, like where we seen Bioceres focused on alone before. Marrone comes in, has the specialty crop business, has some products that fit into that, as well as the row crop, so it makes that side even more robust. And then you have the segment side of things, which I think is really interesting. You have the Bioceres business really having seed and traits, having inoculants and a little bit of biostimulants and some biofungicides. But what Marrone brings in is really that crop protection side of things. So strong bioinsecticides, bionematicides, really strong bioherbicides, and more biofungicides, and the biostimulant side of the business as well. And so you really get this entirety clear across. We can sit all day and talk about all the different types of biologicals, but they really do cover all the different segments within that are really coming up, whether it's the biostimulants, whether it's the biopesticides. So that's a pretty good spot to be in, and they really have some strength in those products and the active ingredients that are there too. So pretty compelling there. But then they also have the ability to now cross-sell with that business too. And so with that, if you look at the seed and trait business that Bioceres has, they've really started to combine that into what I believe they call EcoSeed, where they kind of have the digitization or a digital platform component, the seed and trait side of things, as well as some bundling in of the biologicals that really support the seed, really support the agronomic foundation of that product, and can deliver that to growers, which means better outcomes for growers, higher margins for Bioceres. But now if you start to look at how the Marrone Bio business can start to bundle into that, program into that, support into that, with that distribution channel up in North America specifically, pretty interesting long-term benefits, I think, that we'll see there. And then you have the scale dynamics, and really this is compelling because obviously from a manufacturing perspective, it better able to utilize their R&D. But just to even look at Marrone Bio, I can't remember the exact. I believe they were about $45 million in revenue for 2021, something like that, but just shy of $40 million in 2020. But they actually had a loss of right around $20 million. So they were losing quite a bit of dollars on a relative basis, but they actually have really strong margins, like 60% gross margins, which is quite a bit higher than the biological business of Bioceres, which is about 50%, I think is what I was seeing there. So really nice acquisition that can help with some of these synergies. I think they're looking at $8 million in operational synergies, $20 million in product portfolio synergies. So there's a lot of opportunity there to really bring together the scale side of things and drive long-term success of these organizations as one. And I think when you look at the timing of this, I think it was really smart for Bioceres as well too. In my mind, Marrone was only going to go up in value in terms of demand. I've talked about it the last couple weeks, specifically when covered the Plant Response acquisition by Mosaic, that there's a lot of demand in building out a portfolio. Some of these organizations are, whether it's a fertilizer organization, incrementally moving towards some biostimulant capabilities. You're seeing that same sort of aspect in the crop input side, as well as trying to the crop protection manufacturer side, trying to move a little bit more towards the biostimulants, biofertilizers, biological crop protection. And so Marrone was really well positioned, and I think they were going to be an organization that some organizations were going to target. And so really compelling there. And so I think from a Bioceres perspective, they paid quite a bit, but I think over time they are going to really see that pay off in spades, assuming some of these trends continue on, assuming some of the R&D pipeline comes to fruition. I think it's a really good acquisition, and I think we're just going to see more of this coming. It's pretty topical. There's a lot of buzz around it, and I think when it comes to getting more technology, more capabilities in the biological space, everybody's interested in that, and there's a lot of benefits to farms, environment, organizations, and a lot of incentive to do so. So something really compelling there, and excited to see how that one plays out. Next, we'll talk quick about the Canadian Competition Bureau ruling on FBN. Just a quick background. So I think it was late 2019 and announced in early 2020 that the Canadian Competition Bureau had said that FBN had filed a complaint focused on the distributors in Canada, or a couple distributors specifically in Cargill, which has their ag resource arm in Canada, as well as the Univar distribution group, which has now exited that business in Canada, but nonetheless they were the distribution side. But then also getting into the manufacturers such as Bayer, BASF, Corteva, the main groups, and the investigation was really focused on determining three things according to the Bureau: whether there was an agreement or an arrangement against FBN that existed between any of the targets, so those aforementioned manufacturers and distributors. If any of the targets abused a dominant position by acting with negative intent to exclude FBN from the market, and if any of the alleged conduct had or would likely, as a result, have substantially prevented or lessened competition. And fundamentally, the Canadian Competition Bureau found that there was no wrongdoing by any of the crop input manufacturers or distributors. There's nothing being done to decrease competition from the Bureau's perspective. There was one really interesting comment, though, in the release that I noted, and it really stated this: nonetheless, the evidence does suggest that certain market participants communicated with the goal of influencing suppliers with respect to FBN. The Bureau views these communications, which took place in a highly concentrated sector, to be a significant concern. And I found that really interesting. Specifically, if you look at it, it says the goal of influencing suppliers. So that signals to me that it wasn't so much there was no Bayer, BASF, none of those groups saying, hey, what are you doing? Hey, what's going on here? This was really the distributors, maybe some retailers potentially, but they weren't noted in the complaint, sending emails to the manufacturers, so the Bayers, Cortevas, trying to influence those suppliers' desire to deliver products or support products going to FBN in the future. And so there's a couple angles to this that I find interesting. And first is really the incumbent angle. So if I'm a distributor, or if I'm a retailer, and I see FBN coming in, I think there's a couple things to note here. And the first is that the industry, everybody knows everybody. All those individuals are probably friends, probably communicate one another, and I don't mean that in a bad way. I think it's good to have a tight industry, and in a lot of regards, there's a lot of great people that work in it, and so it's normal to just send emails or maybe some messages about, hey, you know what, maybe you shouldn't supply them. Hey, I want to know what's going on, that sort of thing. But I think the real business angle to this is more along the lines of, if I'm a senior leader at any of those organizations, I think it's my job to probably try and influence whether my supplier or long-term partner does support a new competitor. Again, using above the bar, high integrity tactics, of course, but I'm going to take the angle of, hey BASF, hey Bayer, hey Corteva, look what we're doing to invest in the community. Look what we're doing to support the successful utilization of your products with assets. Look at the education that we've been delivering. Look at how we've supported you over the last number of decades. You're going to use every single angle to try and make sure that you're getting all the attention of your suppliers. There's not more people coming in to create more competition. I think that's just what a good business person is going to try and do. Again, using above the bar communication and tactics, not something that is a little bit on the, let's call it the greasier or sleazier side of things. And so that's one angle. I think the FBN angle with that comment above that the Bureau sees a significant concern is that if I'm FBN, I'm probably going to take that message and try to reinforce that to my staff, reinforce that to my customers or potential customers, saying, hey, you know what? Look, they are trying to create less competition. They're trying to keep us from supporting you. They're trying to keep you from having lower input prices. I think that's probably the win in this for FBN, is having that message to reinforce to their members or their potential members. And I think if anything, that's a pretty good takeaway for FBN from that. But fundamentally, some of the people at FBN might not like me saying this necessarily, but I fundamentally think it's been a good thing that they haven't been supplied, whether it's in US or Canada or wherever country. I think the constraints that were brought upon FBN by not having access to product and them having to actually go out and, of course, spent a ton of resources, a ton of time. I'm sure there was immense headaches and pain getting this developed, but they had to go actually start to source the active ingredients, manufacture the active ingredients into a product, create the product, do the registration. They vertically integrated and created the only fully integrated direct-to-farmer business that there is out there in North America today. And I have no idea what the economics of their business are like, whether they're flawed and they're upside down on their unit economics, or whether there's really big gains that they're seeing there. But from just a pure strategic perspective and my outsider's view, it's giving them a lot of control over their supply chain. We've seen some of the stories about how they were able to have warehouses full of glyphosate because they have those relationships, because they integrated like that. They have the agility, they have the ability to create a cheaper product now as well to support the input costs of farmers, which again is one of their core mantras. And so, I know that FBN really wanted to get supply initially from these manufacturers, and maybe they do still try. I'm sure that would be desirable in a lot of ways, but I do think that there has been some benefits for the long-term longevity of the FBN business, purely from looking at it from that strategic perspective. But again, we'd need to see the actual finances of their business to know if that's truly the case. And so, interesting note, but at the end of the day, no wrongdoing by any of the organizations in Canada when it comes to the lack of support to FBN in this geography. Quickly, lots of talk on the See and Spray buzz, so these are the last two quick points for everybody. John Deere launched the See and Spray Ultimate a couple weeks ago now, and got a ton of questions, ton of comments on it. It's probably been one of the most topical news events for those that work in ag retail, in crop protection, manufacturing, that sort of thing. It's been very notable. And I don't have any of the specific answers of what exactly is it that a retail should do, what is it that a manufacturer should do. I think there's a ton of things to be doing when it comes to aligning yourself with an organization, understanding it, looking at new services to support, looking at working with some of these organizations to be able to build out an understanding, maybe a product, maybe it's something that really fits into your fleet. If you're in the US where you have a lot of sprayer units, for example, I think there's a ton of different angles in more specific sense, but broadly speaking, I don't have any specific suggestions, which has been one of the most topical questions coming into me. But what I found the most interesting when I started to think about this is I've long advocated that, not even advocated, just thought that See and Spray capabilities are going to be one of the most rapidly adopted ag technologies that we will see. And when I started to look at how to actually figure this out, and again, we'll never actually know. I'm forecasting, I'm trying to guess here, of course. But when you look at a number that BASF actually released last year, when they announced more pointedly their relationship with Bosch and their Zarvio Bosch relationship with their smart spraying capability, they said that they forecasted about 50% of sprayers, and I believe this was in North America, about 50% of sprayers by 2030 to have smart spraying or See and Spray capabilities, which is, from 2021 was about a 9-year period at that time. And so you start to look at that. It seems kind of slow, but if we actually go and look at some of the data from other ag technologies that have been adopted, we can actually see that would make See and Spray technology the most rapidly adopted technology out there. And so I pulled up a chart from the Kansas Farm Management Association, and they did some cool work showing how long it took a specific technology from the date available to get to 2.5% adoption. So the innovators on that innovation adoption curve to 16%, which would be considered crossing the chasm on the innovation adoption curve, and then to early majority, or 50% of the individuals adopting the technology. And the quickest technology that made it to 50% was automated guidance. So auto steer, for example, GPS capabilities. And it took 11 years from the date available to 50%. If BASF is accurate in that forecast, that would make it about 9 years, which would make it as rapidly adopted. And that's when you start to look at the implications in those years. There's a lot happening every single year, and so I think that to me just signals that it is something that needs to be taken very serious. It is something that needs to be looked at in a very meaningful way, and it is something that's going to impact us as an industry moving forward, whether you're a farmer, an equipment company, fertilizer company, because of all the capabilities, manufacturer, retailers, everybody. So interesting note there that there's a ton of buzz, ton of demand, and some of the adoption dynamics are pretty interesting there. Lastly, World Agritech event is going on in San Francisco next week from, I believe, Tuesday to Wednesday, so the 21st and 22nd. I think next week will be pretty busy upstream week. I think there's going to be a lot of news and announcements coinciding with one of the first really major ag tech events that are back in person again. And so pretty exciting that there'll be some cool stuff within upstream next week. But just wanted to mention I'll be at World Agritech in San Francisco from Monday to Thursday. And so if you want to meet up, if you want to have a conversation, please reach out, and would love to meet up and chat with everybody that's interested in the space and that's going to be attending as well. With that, thanks everybody for listening. Thanks for tuning in. And if you do have any questions or comments, as always, feel free to reach out or comment, and happy to engage in a conversation and a chat. So thanks everybody.